Ladies and gentlemen, good day and welcome to the Q1 FY22-23 earnings conference call of the Karur Vysya Bank. We have with us today the management team of KVB represented by the MD and CEO, Mr. Ramesh Babu, President and Chief Operating Officer, Mr. Natarajan, CFO, Mr. Ram Shankar, Company Secretary and Compliance Officer, Mr. Srinivasa Rao. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. B. Ramesh Babu, MD and CEO, to take us through the highlights of the quarter gone by, after which we will open the floor for questions. Thank you, and over to you, sir.
Thank you, Mr. Steve. So, good evening to all of you. Welcome to our bank's earnings call for quarter 1 of the financial year 2023. Trust that you, your colleagues and family members are keeping well and are in good health. I am sure that you would have gone through our presentation on our quarter 1 performance, and I am glad to share that the results reflect the outcome of the plans, strategies and efforts put in by us. My brief on the performance highlights during the quarter and guidance for the remaining quarters of the current financial year is as follows. As you are aware, we have reported a consistent improvement in our performance during all 4 quarters of financial year 22 in terms of growth, profitability and asset quality. I am pleased to report that the trend continues in quarter 1 also, and I am confident that the same will continue. Rather, we will aim for further improvement of the performance in the ensuing quarters. Based on economic indicators, as well as the prevailing uncertain environment and geopolitical issues, at the beginning of the current financial year, we have cautiously estimated a business growth of around 12% on the deposits as well as advances front. Considering the current trends, particularly on the demand for credit in certain specific sectors, as well as the growth witnessed during the first quarter, it is likely that the growth will be higher than 15% on advances and deposits for the year 2023. We continue to hold our NIM at the north of 375 basis points. So it was 382 basis points during the current quarter as against 355 basis points last year and 379 BP during quarter 4 of 2022. Our consistent efforts to keep the costs on lower side, coupled with improvement in yields on investments and advances during the quarter, supported the improvement in the NIM. During the quarter, we have increased our deposit rates for select maturity buckets by 50 basis points, which is likely to impact cost of funds going ahead. Nevertheless, we expect that our yields also will proportionately move up, enabling us to manage NIM at 3.75% levels. Net interest income has gone up by 17% year on year and sequentially by 5% on account of lower cost of funds and increase in yield on funds and further supported by growth. Yield on investment has moved up from 5.36% at the end of first quarter of last year to 5.64 and sequentially improved by 11 basis points. As indicated earlier, it was a conscious call taken by the bank to keep the duration of AFS investments at a shorter level for quite some time. The securities now maturing are replaced by those with higher yield as per current market trends. Our yield on advances has remained flat at 8.27. About 30% of our loan book carries pricing linked to EBLR. So policy rate changes have been transmitted to working capital accounts concurrently, and term loan accounts are repriced as per the terms of the contract. MCLR has not been revised during the quarter. Factoring the deposit and other costs, it will be reviewed based on the market trends. Non-interest income has marginally declined by 4 crores over corresponding previous quarter. This is mainly due to higher depreciation on investments amounting to 37 crores and a lower investment trading income of 4 crores, which has offset the improved fee-based and other income. we do not expect any significant depreciation on our AFS SLR portfolio considering the low duration. Investment portfolio includes interest earning non-SLR bonds and debentures of 1,507 crores. In tandem with the yield movement, there is likely to be some MTM losses in case of further hardening of interest rates. Operating expenses have gone up by 10% in view of the increased scale of operations and higher business volumes. However, increase in revenue is to the tune of 104 crores, while the increase in expenses is only to the extent of 63 crores, enabling a lower cost to income ratio of 49.68%, which is lower than the previous quarter and previous year. We continue to focus on this and aim to keep the ratio at around 50 levels. Operating profit for the quarter increased to 475 crores, up sequentially by 8% and 15% on year-on-year basis. This is on account of increased NIM and lower cost-to-income ratio. Provision for NPA for the quarter was at 140 crores, while net slippages were negative. The provision requirements in respect of migration, aging needed to be undertaken, and also to further improve the PCR. Overall, the credit cost, including standard and restructured advances, is 1.09% as against 1.25% for the last year. Credit cost for the NPA is at 0.95, and for the year 2023, we expect that it will be at about 1%. Net profit has risen to 229 crores for the quarter, which is more than double the previous year, and also sequentially up by 7%. ROA for the quarter is at 1.09% as against 0.57% during the first quarter of the previous year and 1.06 during last quarter. As indicated earlier, our estimated ROA will gradually move up, and for the whole year it would be around 1.1%, and for the exit quarter it would be in the range of 1.15 to 1.2 subject to normal market conditions. Our CRAR continues to be robust and is at 19.21%, providing us a comfortable headroom for growth. Our liquidity is comfortable and we continue to maintain LCR at around 200% levels. I will now brief you on some aspects of our credit portfolio. First thing is slippages and asset quality. Gross slippages were at 139 crores during this quarter, which works out to less than 1% of the loan book on an annualized basis. Our recoveries as well as upgrades have surpassed the slippages during the quarter 2, resulting in a negative net slippage to the tune of 21 crores. You may have observed that the bank has been showing net negative slippages without taking write-off into account during the past 4 quarters. Technical write-off of 303 crores during the quarter has been undertaken. There was no sale on SR basis during the quarter. Our estimated gross slippages for the year ahead will be in the range of 1 to 1.5%, and considering estimated lower slippages and possible recoveries from the existing NPA book, we aim to achieve negative net slippages in the coming quarters also. SMA 30 plus balances at the end of quarter stood at 570
Anyone who wishes to ask a question may press star and one at this time. The first question is from the line of Prashant Poddar from ADIA. Please go ahead.
Yeah. Good afternoon, everyone. Good evening, everyone, actually. So congratulations, sir, for a very strong performance in both balance sheet and profitability. Two questions. One is if you could help us understand the investments you're planning to make in strengthening the liability franchise, as well as the retail asset franchise. There were some changes, restructuring related. You did some restructuring of retail business in the last quarter. If you could tell us the progress of that and how that is likely to help you improve your retail assets growth in the future. So these are the two questions I have.
The first one is the retail investment in the retail. Thank you first of all, Prashant. So you are asking about the deposit franchise, how we are going to restructure and what is our approach, correct?
No, investment in, so you talked about some branch additions as well last time. So
Okay, fine.
Or whatever. I mean, what are you going to support them with for getting deposits?
Yeah. Thanks, Prashant, first of all. Yeah, good evening. There is a multi-pronged approach we want to take for the deposits. One is branch addition is one part. Last year itself, we tried to open 15 branches. Because of the first quarter, we had issues. We could finally open 9 branches. And this year, we are planning to open another 15 branches, including the backlog also. We will try to cover it up and all. As many branches as possible, we'll try. The main focus of these branches would be mobilizing the deposits and the smaller level, the loans, what all are available, the retail as well as the commercial also to do that and all. But in addition to that, we are making some more efforts. Actually, internally, we are making some more efforts because we have got the approvals for the government, and we are trying to focus now on the institutional as well as task also. So we have capacity building also we are doing and all. And that is with that, our focus will be on the CASA as well as the task. These sort of segments we will focus on that. And we are focusing on our ETB segments because, as you know, 106 years, the bank's legacy is there. Up to last year, we didn't focus much on these term deposits because the credit growth was not that much and all. Even if you mobilize profusely, you may have to deploy them at a lower rates and all. So that is the reason now we have activated all our branches. Even if you look at our renewal percentages also, it is more than 80% in respect of many of our branches. So that way, if you look at it, so we are focusing on that particular. And senior citizen is another segment where the bank is pretty strong. And this we are going for that. And the channel, what all is there, feet on street, other channel other than the branch channel. So we are strengthening that particular channel. Currently that is there, and now we are further strengthening and we are making it active by taking people from the market also. So that way, if you look at it, overall we feel we will be able to manage. If you look at it, our overall the growth of the deposits in the first quarter on a year-on-year basis is also 11%. Even the current account as well as the savings bank also, it is more or less much better than what we were doing last year. So that way, what we feel. So with the existing setup and the additional measures what we are going to take, so we will be able to meet the requirement what all is required for the credit growth. And one more thing also, Mr. Prashant, just I want to say one more thing, sorry. The BC partnerships also, we are actively working on that. Already one BC, business correspondent, so we have worked, the technology integration has been completed, and we are in dialogue with a few more because that will be a light touch model and all. We need not open a full-fledged branches. The BC will have their outlet and their main activity is to mobilize the deposits. So that way, BC also simultaneously we are working on that.
This is good to hear, sir. Thank you. And on the asset side, if you could help us understand the retail asset.
Yeah.
So we have done some restructuring, the progress of.
No, you want to know about restructuring or asset growth?
No, so you talked about the restructuring. So what is the progress of that? Is the team
Yeah.
integrated now?
Absolutely. What we are trying to do is, so we have created a channel for the Neo for a few other products which are going. So what we are planning actually is, Neo is a channel with feet on street. Currently, the home loans, these sort of things and all are being handled by the branches. So now we are planning to have Neo team also used for this purpose. Currently, when they are using the lab, and the same customers, they have the requirements of the home loans with other banks and all. So that way, the feet on street currently available with them, we are going to use them also for mobilizing the home loan structure. So that way, home loans will be another focus area. Mortgages and home loans we will try to do. Another focus area would be the gold loan. So internally, we are making some more restructuring. We are trying to do it and all. Gold loan will be another focus area because there the yields will be better as well as NPA is low, and already many of our branches, they know how to do it and all. So some more strengthening we are doing, and market related practice we are trying to bring. So that way these mortgages as well as gold loans will be the pole areas which are going to take the retail segment forward.
Okay, if I can just add one more question, sir, related to this. So you've been entering into certain partnerships in the last few years. If you can tell us about some of the relevant partnerships which are kind of contributing currently to the growth, and any incremental partnerships that you have entered into, not exploring, but entered into. Yeah, that's all from my side, sir. Thank you.
Sure. No, one thing is, last time also we were discussing on the gold loan front. The Rupeek, with them we have entered into an arrangement. So with a few districts already we have covered and all. Now the momentum started getting and all, around 150 crores, something like that. We have got it. Now further fine tuning the commercials, all these things we are finalizing. With that, we are going to take it to the next level. That is with the Rupeek. Likewise, the Cholamandalam, what we have entered. So for the vehicle financing, these sort of things and all. So this is working well and all. We started getting a lot of traction into that one and all. And we are in dialogue with a few more people. So once we work on that, we would like to do it under the MSME segment. So for these of co-lending and partnerships. On the one side, Amazon is working well. It's going on pretty well that way. That is not an issue. And Rezapay also we have entered. So that also started giving some sort of numbers and all. So that way, instead of entering an arrangement for the sake of entering, so we are seeing the value wherever it makes sense because it requires an investment on our part, the technology also. So selectively we are entering and all. So we are in dialogue with a few of the players for the liabilities also, digital players who can support us and all. So that way, whichever way assets or liabilities, we are in discussions with the players and all. So we'll take it forward, Prashant.
Thank you, sir. Thank you and all the best.
Thank you. Thank you.
Thank you. The next question is from the line of Renish Patel from ICICI. Please go ahead.
Yeah, hi, sir.
Hi, Renish.
On great set of numbers. Hi, sir. Good evening, sir.
Good evening. Good evening.
Yes, sir. So, a couple of questions.
Mr. Patel, your audio is not clearly audible. If you can take the phone on handset mode, please.
Is it better now?
Yes, sir.
Absolutely. Better.
Yeah. Yes, sir. So, a couple of questions. So, one was on the restructured book. Okay. So, as per our presentation, our NPA in restructured book is close to 360 as on June quarter, sir, what percentage of disbursements are coming from the neo channels?
I can say on an average, the monthly growth is around 125 crores we can expect. That's what is the run rate going on. Now we are looking at a few more areas which are actually a deeper hinterland. So where you need not have a branch and all, but the feet on street can go and do it and all. So that way, rather than focusing on the metro centers, if you go deeper into the semi-urban and tier 2, tier 3, the business opportunities are much better. So we are going into that one. So 125, that range we are going. So we will see how to scale it up.
Okay, but sir, in terms of the contribution, any ballpark number would you like to highlight?
So contribution, you mean to say that which way you are saying that?
So let's say if we are disbursing 100 rupees a month, how much of that is coming from this neo channel?
No, that's what if you look at it, suppose the overall growth, what all you see, if I say 125 for a quarter, if you look at it, it is coming to 375 crores is coming from Neo.
No, sir. Can you please repeat that, sir? I missed that.
No, in the quarter, what all advances growth is there. So you can say 375 crores because 125 is the run rate for the Neo if I say per month the growth. So 375 crores, suppose overall for whole year if you look at it, around 1500 crores will come from the Neo channel.
Got it, sir. Okay, got it. This is helpful, sir. Thank you.
Thank you, Ramesh. Thank you.
Thank you. The next question is from the line of Mahesh MB from Kotak Securities. Please go ahead.
Hey, good evening, sir.
Good evening, Mahesh.
Yes, sir. How are you, sir?
Fine, thank you. Yeah.
So just one question. One is on the, if you look at your portfolio in terms of yield repricing on the loan side, could you just tell us how does it work in the next couple of quarters?
Yeah, if you look at it in the inaugural this thing I was mentioning, so this repo is concerned, working capital straight away we have passed it. And within already 1 month is already over, next 2 months. So majority of the other EBL are linked. So we will be passing it on. So that way there should not be any issue. Here and there, wherever the customers, the value of the customer, these things and all, we may give a concession and all. But otherwise EBLR is concerned, not an issue. But if you look at our cost of funds, currently at 4.09, which is the lowest actually in the bank also, if you look at it last 10 years, these sort of lowest cost of funds we didn't find. So with these cost of funds and the other costs remaining more or less stagnant or under control, the MCLR side we will not be able to increase it immediately. So once we have already increased the rate of interest by 50 basis points for the other deposits, making it more market related compared to peers and all, our rates are relatively attractive. So with these things, once it kicks in and the cost of deposits goes up and all, then automatically will translate into MCLR. If overall, if you look at our credit book, 85% is under floating rate. Suppose under the 31% is under EBLR. So rest of the 55% is under MCLR. The moment we start increasing the MCLR, automatically, there also the working capital will get immediately repriced and term loans also will get repriced over a period of time.
Yeah, Magesh, only one with reference to your point, we already indicated 30% of our loan book is from EBR. So we drill it down further, 33% of our EBR book is towards working capital. So this already is all passed on to them. So out of the remaining 67% term loan portion, 56% is reset is already done. So what is left out is only 44% of the term loan component of the EBR. That means roughly around 5,400 crores. So you expect another maximum 4 to 5 months, all these things will be replaced.
Okay. And on the cost side, how does it, in your sense that these margins that you have reported today, is it fair to say that you have at least a tailwind for at least another 2-3 quarters before it starts coming back to where it is today?
Yeah, absolutely. Because the reason is the increase in the cost of deposit will not reflect. So over a period of time it gets reflected. But whereas the MCLR as well as the EBLR, what all we are changing, working capital, we are able to hit them straight. And within 3 months, certain term loan also is coming. So that way we will have the benefit for a few quarters definitely.
And you don't think spreads have come off because of competition in the market? It's kind of holding up, as in you don't have...
No, now the competition has come down, absolutely that way. So the number of accounts which others are taking have come down drastically because our pricing is also quite market related. And last year during COVID, what all pressure we were facing and all, that currently we are not facing at all.
Okay, perfect. Thanks for this. And the second question is on your, so you kind of indicated your gross NPAs will be below 5% this year. We are already at 5.2. You don't seem to have a very large book in terms of stress portfolios. Is it you think this number is extremely conservative here?
No, it may be much better. In fact, you see how we were there at 3.3 odd in net NPA, and within 2 quarters we have moved to 1.92. Okay, so in fact the three-pronged approach we are actually trying. One is the growth, and second thing is aggressively we are working on the NPA reduction, and third thing is the provisioning prudentially what all is required. But when we are talking about the gross NPA reduction, there are many big accounts which are stuck with the consortium, NCLT, courts and all. So these more or less at the fag end, if it clicks as it is, we will be able to get it. Otherwise also we'll start working and all. 5.5 below 5% is, I'll tell you, even 4.2 is also below 5%. So that way our focus is to clean up this one and all. Once and for all we want to get out of this. That's the reason I told net NPA also we are actually aiming to come to around 1% by 23, so that we can put all these to an end. In future, what all we are earning as a PPOP, it should straight flow into that profit. All these leakages, different holes and all should not be there. So that way entire cleaning up operation is there and business growth is on one side is there. This is our plan of action.
Perfect, sir. Done. Thanks a lot for this.
Thank you.
Thank you. The next question is from the line of Bhavik Dave from Nippon India Mutual Fund. Please go ahead.
Hi, good evening, sir.
Good evening.
Thank you for the opportunity. Sir, similar question to what Mahesh was asking. In terms of we've upped our credit growth guidance of 15%, and we've been talking about maintaining that 4.75% margin. Both these can be achieved in tandem, right? Like because you mentioned to the previous participant that growth is not a challenge considering the competitive intensity has come off and the drawdowns or balance transfers that were taking from our book has reduced substantially. Is that a fair thought to have?
Absolutely. What you said is correct. Both will have to go in tandem. Suppose for the sake of growth, if you start compromising on the NIM, the purpose will be defeated. So that's the intention is, if we grow only in a particular segment, so then the question of compression on the NIM comes up and all, but we want to grow under each of the segments. That's the reason the introductory remarks we were giving. Vertical wise, we have given the guidance and all. So under the vertical also, whichever are the products where you are going to yield better and with a lighter capital hit and all, so we are focusing on those lines. That way these two will go in tandem, 15% as well as 3.75.
Understood. And the second question is on the ROA trajectory that we are looking for, 1.15, 1.2% exit. Sir, we already reached 1.12 for the quarter, right? And we've been maintaining
1.09.
1.09. Yeah, 1.09. So my point is, the incremental that will come of whatever 6-7 basis point or 10 basis point that you are expecting will come from lower provisioning or any other lever that you think is possible. And second question is, sir, what is the kind of ROA that we will aim for, right? Like 1.1, 1.2 is what we've achieved, and historically we've been like way higher than that, considering the kind of business that we've been running. Do you think
A concerted effort has been made on every lever of ROA to reach this 1.09. Now our intention is to see on a sustained basis this 1.109, 1.1 and 1.2 reaching. So let us cross the bridge this year, but we are equally interested in seeing that. Another question what you are asking is, so to tinker the provisioning, what all?
So we request all participants to please stay connected while we reconnect the management. Ladies and gentlemen, the line for the management is reconnected. Over to you, sir.
Sorry, Bhavik. Bhavik, the second point we are asking is, by tinkering the provisioning, are we going to make the ROA? No, intention is not that at all. So all of them will have to go in tandem. The cleaning of the balance sheet, provisioning, PCR, as well as the net NPA reduction, ROA, everything it has to come from the growth as well as other income. Ideally, they must support, and intention is also to grow from that and not to have cutting the corners from other side.
Perfect. Very well understood. And we will continue to grow at 50% if this environment or the credit growth stays, right?
Yeah, absolutely. We are optimistic, so we are pushing the entire team on those lines only.
Perfect, sir. This is very helpful. Thank you so much.
Thank you, Bhavik.
Thank you. The next question is from the line of Jay from BNK Securities. Please go ahead.
Yeah, hi sir. Good evening and thanks for the opportunity and congrats on a good set of numbers. Most of the questions have been answered. Just one question, sir, on your yield transmission. So I think during the call you had mentioned that 30% of the book is EBLR, of which working capital you have already passed on the rate hike. So just wanted to understand, sir, when you pass on the hike to the borrower, is there a renegotiation on the effective rate to him, or he by default he would be paying 40 basis point higher, or can he come back and renegotiate the rate? How does it work actually?
No, I'll be very practical with you, Jay. Thank you first of all. So ideally, to the extent possible, we are straight away passing on that 40, 50, what all 90 and all we are passing on. But there are few.
Sorry.
Members of the management, if you can confirm your presence.
Hello.
Ladies and gentlemen, the line for the management is reconnected. Thank you and over to you. We have Jay online with his questions.
Yeah, extremely sorry, Jay. The line got disconnected once again. So regarding the yield transmission, what I say, so the working capital is concerned, straight away we could pass it on, not a problem, transmitted. And the term loan is concerned, so there are few cases where depending upon the relationship, AAA accounts are there, some sort of a negotiation was there. Otherwise, we are taking the total relationship value into account. Few cases we would have agreed, but I can say that majority of the cases we could pass it on.
Right. So the by default there is a transmission. If someone
Yes, absolutely. Yes, by exception only. Exception, it will come up to MD level for giving these sort of things and all. We will evaluate what overall for this we are getting and all these things we will see. Otherwise, the routinely should not be, the delegation is not given at the lower levels.
Understood. Great. And sir, on your restructuring, out of your 1,500 restructuring standard account, what is your sense, of the default here over the next 12-18 months?
See, actually, Jay, already we have indicated, based on our experience and also study, is roughly 20% we are expecting, predominantly on the MSME and other sectors, not on the corporate.
Okay.
Jay, one more point what I am saying, this percentage what we talking now is, it is because dynamic. The reason is, so the denominator will be coming down. The many repayments are coming. If you look at this one also, there are closed 26 crores closed and all, recoveries 45 crores is there. With all these things, denominator will be coming down. So that way, we overall feel that from the original number, the overall the NPAs, the slippages, hello?
Yes, sir. I can hear you.
Slippages will be around 20% on the overall number. That way we can say. So tomorrow, suppose it becomes 30%, the denominator comes down to 1,000 crores, it may be 30% also.
Right. No, that is okay, sir. But let's say your restructuring at the peak was around this level only, right? 1,600 something.
Okay, yeah, correct. 1,800 it was there and all, so it is correct. True. But now the inflow is
400 crores.
No, agreed. But in between the inflow was there. From April onwards, there is no inflow. There will be only outflow will be there, repayments and recoveries will be there and all. So that way, anyhow, we have a different model and closer monitoring of these accounts separately, unlike we didn't bundle it with rest of the accounts.
Right. And your corporate restructuring, you have a fair visibility, right? That these are, viable account, right? Because usually there is an issue at the corporate level.
Correct. I'll tell you, many of the accounts, because of the DCCO extension, they have come and landed here, but the repayments have not yet started. Whereas there, if you are continuously monitoring them and all, they are on track. So that way, we do not foresee any big hit coming from the corporate segment into the restructuring NPA.
Understood, sir. And last question, sir, on your OPEX, because the base common trend from the banks so far in the last 1-2 quarters has been there is a sharp increase in the operating expenses, staff and particularly non-staff. How are you looking at your bank in terms of OPEX growth for the, let's say, next 12-18 months?
Yeah, CFO is there, yeah. Jay, on OPEX front, one thing what we have to see is the last year, because of COVID, the base was low. Okay, that is one reason if we compare, this year it seems on a higher side. Other point is also, certain things actually because of this COVID, we are like the rents were renegotiated and deferred. Moreover, the certain expenses because of the growth in business, it has to be, cannot be avoided. For example, marketing expenses, advertisement, which was literally not there in Q1 or June. So those things again we need to start doing it.
Likewise, the DSA, feet on street, all these things, because you cannot compromise on that now. If you compromise on that, it will speak badly on the business.
One thing, whatever the accretion of this is what we get, that should compensate the whatever any incremental cost which we incur.
Yeah, also you need to appreciate one more point. You see, when we were struggling at the cost income ratio, everyone used to ask 54, 55, when are you going to come down to below 50? So we are happy that at least this quarter we are able to bring it down, because all rounded we try to do both on the income side and expenses side. 49.68 we could bring it down. Our endeavor is to continue and to further improve this one.
one more point also, this number is after considering the depreciation of investments also. Suppose if you exclude, the number is 47.78, further lower.
Right. No, so you're saying the call endeavor would be to maintain cost to income at current levels, right? At 1Q level.
Absolutely.
Absolutely. Please, correct.
Sure. Great, sir. Great, and all the best, sir.
Thank you, Jay. Thank you.
Thank you. Before we take the next question, a reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Dikshit Sankar from Emkay Global. Please go ahead.
Yeah. Hi, sir. Thank you for the opportunity. So, regarding this BCCO restructuring, so what's the total amount of that forms that BCCO restructuring?
169 crore, something like that. So, BCCO was
169 crore, right?
No, I'll just check that number. In fact, I hardly recollect, but I'll have to see that. Anyhow, before the call ends, we'll let you know.
Okay. And in last call, you said that there are 2 big accounts which have got the DCCO extension for the second time. It's good that if you give that number too. How much these 2 accounts form as the total of the restructuring book?
Yeah. So the corporate side, on account of DCCO, how much is there, we'll let you know. But one thing, what I can tell you, there are 2 to 3 big accounts which are under the hospitality. So the work is more or less completed and all. We do not expect any issues in those things and all. Okay. Up and running and all, they'll come out of the restructuring book.
Okay. Yeah. That's it. Thank you.
Yeah. Anyhow, next call, suppose next person is there, I'll let you know this number. Readily available with me.
Thank you. The next question is from the line of Praful Kumar from Diamond Asia. Please go ahead.
Good evening, sir. Congratulations on one of the best results in the industry.
Thank you.
A couple of questions. First on the deposit side, now incrementally we are seeing system growth, loan growth picking up, but deposits are slow to combine. In that background, you have done phenomenal work in terms of maintaining and growing deposits as well. How do you maintain and grow deposits given the fact that your branch additions have been slow for the last 1-2 years? That's the first question.
Yeah, please. I'll respond. Praful, no, let me complete this one. Praful. The first question is, first of all, thanks for the compliment. Now, as I was mentioning, branch channel is one of the channels. As we were mentioning last year and before last year, we were going slow on the time deposit because if we raise the money at 5.5 and all, the avenues were not there. We were deploying the money in the reverse repo at 3.35. So we were having a negative carry straight of 2% on a time deposit. So we were lying low on the time deposit without pressing an accelerator button there. So now that it is back, so all our branches are activated. The existing customers, whomever they are there and all, the branches are going on 2 fronts. They are working. One for the fresh deposits, and second thing is the renewal of the existing deposits. What all are happening? So this is one. As I was mentioning that senior citizens is one of our good force. So we are approaching them, and that is the reason our rate of interest, if you can look at it, compared to our peers, we have slightly kept a shade above so that we can get our deposits also. So that way, time deposits, our branch channel will bring it. And as I was mentioning, CASA on the task institutional, we have created a structure now. And next one or 2 months and all, we will create that structure for the feet on street, rest of things. So that channel also will be developing these fresh connections and all. So branches will focus on the time deposit, CASA channel will focus. Together we want to take it forward. That is the reason our intention is to progressively reach CASA of 40% also, simultaneously having a growth in time deposit. If time deposit starts coming down, automatically CASA will be up. Intention is not that. So both in tandem we need to move, 40% for CASA and time deposit. So even if you look at it, the industry on an average grew in deposit by 8% and we grew at 11%. So we want to maintain that edge and all. We have activated our branches.
Got it. That's great. So second question, given this backdrop that on deposits you are incrementally gaining share, on the advances side you have done a lot of granularization on the corporate side as well. Retail, you have done phenomenal work on the digital side. Now, is there any visibility today that from 15 you can pedal up to 18% growth over next say 2 to 4 quarters in terms of the pipeline building?
No, I'll tell you, initially till last quarter, we were indicating more or less 12% because last 1 or 2 years, if you look at it now, why to 1 or 2 years, last 3-4 years, the position was quite sluggish. So with these things, I felt actually we need to grow progressively rather than going at a breakneck speed because the issues what we had in corporate, we do not want to repeat in the retail. So that is the reason, consciously looking at the environment, on our own, we have revised the guidance from 12% to 15%. So let us see how it works and all. If actually it's working and all, so no one need to ask on our own how we have improved the 12 to 15%. The same way will come forward and all, we will see how much we can grow.
No, that's phenomenal, sir. I think Bhavik also asked a very relevant question that you have, reached 1.1, in terms of ROA. And since you are generating enough and more, it's a good time to build pipeline and, look at the next level of ROA improvement.
Absolutely. We are absolutely on the job. We are on the job and not only a particular vertical, we are trying to activate every vertical because what all contribution comes, a grain of gain is a gain.
That's well said, sir. Congratulations and all the best, sir.
Thank you. Thank you very much. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Prashant Kumar from Sunidhi Securities. Please go ahead.
Hello.
Hello. Yeah, Prashant. Good evening.
Yes. Thanks for the opportunity, sir. And on the profitability side, obviously the bank has performed outstanding. Just on the balance sheet side, borrowing has increased around 150% year-on-year growth. And so just wanted to understand that if the deposit is not growing at that level that advances the CD ratio can match. So why not we have cut the investment some point of and we can manage because obviously the borrowing must be a higher level and investment may have given us a lower yield. That's it, Maj.
Yeah. See, whatever investments we are doing, this absolutely is not from the borrowed funds. So whatever borrowing for borrowed funds you are seeing on the end of the quarter or end of the year is on a maybe a 1 day, 2 day. It's against the government securities, the repo borrowings we are doing it. By and large, our CD ratio is something around 83 to 84%. If you are maintaining 84% CD ratio, naturally 3,000, 4,000 crores surplus funds bank will be having it. That's what the LCR is 264%. So that is what we are investing in the short-dated securities and depending upon the yield, we are doing it. So in that way, over a period of time, probably that the credit demand picks up. These are all short-dated securities where easily we can come out from that investment. That is not an issue.
Yeah, one more point just I want to share with you. It is a transitory. That particular day, if you look at it, that number, the borrowings you may be finding 2,611. But currently, if you look at it, it is less than 500.
Yeah, yes.
Okay, so that way, as I said, it is a transitory number. On that particular day, it has come up and down. So it is a question of management of the funds that way. Now it is below 500.
Again, the balance amount of the borrowing, for example, refinance, we borrow from SEBI, we borrow from NABARD. So these are lower rates. So in addition to that, for example, precious metal. So whatever we are, the business we are doing, it's only a borrowing of gold, bullion. So in that way, that here is not a very vanilla borrowing. It comprises of different combinations.
Okay. And that's it from my side. All answer.
Thank you. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. Participants to ask a question may press star and 1. The next question is from the line of Abhishek Tandon from Bowhead India. Please go ahead.
Good evening, sir. Thank you for the opportunity. So what would be the overlap between a restructured and SMA book?
Sorry, please, you have to repeat it because it's not clear, please.
Okay. So what would be the overlap between a restructured and the SMA book?
Restructured SMA book. Now, overall, our SMA, you would have seen it, it is less than 1%. That includes restructured also. But restructured separately, that includes restructured also.
Yeah, so that's what I'm asking. So what would be the overlap? What would be the restructured book that's also coming in the SMA part?
One second, we'll give you. I think 93. How much is it? I think 93 crores is there in that. Out of the 500 crores odd, what we have told SMA 30 plus, which includes some 40 crores under the jewel loan and 93 under the restructured book also, SMA 30 plus is there.
93 crores. Okay. Thank you so much, sir. That's it from us.
Okay? Yeah. Thanks.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. Ladies and gentlemen, we take that as the last question for today. I now hand the conference over to Mr. B. Ramesh Babu, MD and CEO, for closing comments. Over to you, sir.
Thank you very much to every one of you for the interest you have evinced and for participating in the conference call. Thank you and good day. Thank you.
Thank you. Ladies and gentlemen, on behalf of the Karur Vysya Bank, that concludes this conference. Thank you all for joining us and disconnect your